Welcome to the Capital News. I am your host, Alex Karitis. Today is Thursday, November 26, 2020. Thank you so much for joining me. It's also Thanksgiving Day here in the U.S. of A, so happy Thanksgiving to all of you out there. Hope you enjoyed your day. However you did it, in a smaller group than normal. Maybe you were defiant, a little bit of a rebel, and you defied a lot of those orders across the states in this country, which are absolutely ridiculous. No rhyme or reason for them, how they come up with them, because if you look at one state to the next, they're all different. But nonetheless, maybe you still got together as if nothing was going on. And some of you, I'm sure might just have been an impossibility, but were perhaps able to get together via Skype or FaceTime or something like that. But nonetheless, I hope you enjoyed it. Hope you had a lot of good food, and we're hopefully able to socialize, because in these times, as we know, with all of the alcoholism and the opioid abuse and the depression and anxiety and on the unfortunate suicides, this pandemic and what's going on here in the economy is having some very negative effects on people's health, their mental health. So it's very important for people to socialize with their friends and family and to be able to be a part of a community and to celebrate these holidays. I just hope that next month, come Christmas and Hanukkah and all the other holidays out here, that people can get together, that these politicians are done acting like the Gestapo. But I don't think that's going to be the case. But I really hope that it is. That they are just done with these types of restrictions and lockdowns and these arbitrary rules, that they're just pulling out of the you-know-where to keep people apart. Now, that's not to say that you downplay the virus and everything like that. But come on. Use some common sense. Look at what these people are telling us. Look at what they're doing themselves in defiance of it. You do it, not me. Okay? It's just becoming beyond ridiculous at this juncture. And as I've been stating, with these other restrictions, lockdowns, curfews, what have you, I mean, you tell these small businesses, because that's what really gets me going. You tell these small businesses you have to shut down earlier in the year. Oh, but if you want to open back up, here's what you can do. Do X, Y, Z, and you can open back up. Okay, so they do X, Y, Z. Why? Because they have to. This is their livelihood. This is their living. So they do it. They comply. And now they're getting shut down again to some degree. But not the bigs, not the Walmarts, the Targets, not the Amazons. They're able to stay open. Home Depot and Lowe's. Small, mid-sized business. Oh, no, you got to shut down, even if you're selling the same goods and services as these bigger companies. Oh, no, you're not essential. People are waking up. People are getting tired of it, as they should be. This is their livelihood. So the title of today's podcast is Turkey or Jobs on the Chopping Block. Because we did get out on, actually it was Wednesday. Usually it comes out on Thursday, but they released it early on Wednesday, was the initial jobless claims figure. So we're going to get to that. I want to talk a little bit about market performance. I want to go into the U.S. debt clock, and we're going to do something a little bit different than what we usually do with the U.S. debt clock. We're going to go into the future because they have a little function on the U.S. debt clock. Again, usdebtclock.org. You can find this, play with it around yourself, and just visualize it. It's going to make your head spin. But just to see where we're going to be at current rates, that's very important because it's probably going to get much worse than this. But if we just maintain our current trajectory, this is where we're going to be in 2024. This is another presidential election away. Okay, remember I was always saying throughout this election cycle, as we're getting closer and closer to election day this year, I said, hey, all of you out there who thinks it's a difference, it makes a difference. What idiot you put in there, you're going to be scratching your head in another 4 years. Because whether it was Thunder Thumbs getting reelected or Sleepy Joe, these problems are not getting resolved. They're only going to get worse. And we're going to illustrate that with the help of the U.S. debt clock. But first, to some market performance. We have continued weakness with respect to the dollar index, trading at 91.89. So we're back at a 91 handle. And this is actually taking out recent lows. And we are back to 2018 levels. All right, so that's big news. And also during the 2018 year, We went as low as about the 87, almost 88 handle, okay? So right now, the dollar index, I think technically speaking, still has some support. But in my analysis here, if we bust through that 88, 87 handle to the downside, it's basically look out below. Because if we have enough pressure to get it to those levels and to push through them, then something's going on. I mean, this is not some leisurely Sunday drive to an 88 or an 87 handle on the dollar index, okay? Something's going on. But I still hold in my back pocket the belief, because of the amount of outstanding U.S. dollar denominated debt out there, that we can still see a swan song, a big reversal up to the upside before the dollar collapses. So we're going lower. The question is, how low and how and when do we get there? When we talk about market volatility in the U.S. dollar, just go back and look at a chart of this year alone. So for there to be a massive reversal, in this case to the upside, is quite possible. These markets are broken. That's the point I want to stress to the audience. This isn't necessarily me hedging my bet, taking both sides of the argument. These markets are busted. They're busted, they're broke, they're manipulated. And this is not tinfoil conspiracy hat theory. It's almost on a weekly basis. We see some major financial institution somewhere in the world, and a lot of times it's here in the United States, getting caught manipulating some market and paying a massive fine. Well, I guess massive is relative to the financial institution. There are massive fines to you and me, but are they massive compared to the profits that these corporations made rigging these markets? Whether it's the stock market, metals market, precious metals market, interest rate market, currency markets, it doesn't matter. Commodities. They get a slap on the wrist. CEOs aren't getting fired. The board members aren't getting fired, even though it's their job as board members to look out for the shareholders, because it's the shareholders that are paying the fine. It's not the CEO or the CFO. It's not the director of the various trading desks who was responsible for this, for the rigging, and knew perfectly well what was going on. The CEOs most definitely don't get fired. Maybe, as a sign of mea culpa, okay, we didn't mean to do it, we got caught, you have to give a sacrificial lamb away. Maybe they have to fire somebody down the line. I don't even think that happens, but maybe it does. But I'm sure they're taken care of too with some sort of golden parachute. Oh, well, you're just, for image sake, we got to appease the SEC or the DOJ or whoever came after them. We just got to, we got to give them blood a little bit here. Don't worry about it. We're going to cut you a check for $1 million. Go have a nice vacation. That wouldn't be surprised me if that happened either. But what we do know for a fact is that these financial institutions are rigging the markets and they're paying hefty fines for them. Now, with respect to JP Morgan Chase, who was just caught not too long ago rigging the precious metals market, paying a $920 million fine, well, we just learned recently that JP Morgan Chase, yes, the same bank, made $1 billion in the trading precious metals. Crime pays, folks. Crime pays. And nothing happens to these institutions and to these CEOs. I mean, that's where it stops, right? The buck stops with the top dog. And it's supposed to stop with the board members, too. Again, who have a fiduciary obligation to look out for the best interest of the shareholders. Well, I guess they say, it's actually good that we commit crime because we actually make more money. So in essence, it's good for the shareholders. That's the sick and twisted world we live in. And as long as that keeps the stock market going up, people don't care. People don't care what crimes are being committed, what ethics and rules violations are taking place. People don't care. Just getting bought off. Oh, my IRA's up, my 401k's up, my stock portfolio's up. I couldn't care less. Why? In fact, most people probably think they're geniuses. Look, honey, I bought XYZ company and look, it's taken off. No, you idiot. We have central bankers printing money like it's going out of style because it is, juicing these markets higher. This is a disaster waiting to happen, and most people don't even realize it. And by the time that they do, it's going to be too late. This is what they do. This is a rinse and repeat cycle. This happens all the time. And because we are so far removed from the fundamentals and from sound and prudent economics and from sound and prudent legislation and other policies, this is going to be a doozy. This is going to be one for the history books. It already is. As bad as 2020 is and has been, hate to say it, but I do think that 2021 is going to be even worse. Because we flooded the system with trillions and trillions of dollars, came out of nowhere, just to keep this thing afloat. Now, what happens if we don't catch our sea legs? Big question. And I don't think we are. And I think there's further evidence of that with initial jobless claims. But that's the dollar index. It's going lower. That appears to be where it's going to continue. But anything can happen. Now, some of the cross pairs, again, these are going to be all against the U.S. dollar, but they're worth mentioning right now. So the euro to the U.S. dollar is at $1.19. The British pound is at $1.33, almost $1.34. The Australian dollar is at 73, almost 74 cents. These are big moves. Haven't been here in quite a while. The New Zealand dollar, or the Kiwi as it's known, is at 70 cents. Hasn't been there for a while either. So pay attention to the currency markets. If those of you who pay attention to the crypto markets, Bitcoin has been on a tear, as have the others, but Bitcoin sort of gets more of the notoriety. But Bitcoin sold off quite a bit over the past day and a half as well, but still on a tear. Well, overnight futures trading, the markets were obviously closed here in the U.S. today for the Thanksgiving holiday, but overnight futures trading, we have the Dow Jones Industrial Average at, well, it's up about 100 points, slightly below that 30,000 point threshold, up 1/3%. The S&P 500 is also up 1/3%, as is the NASDAQ 100. Cash trade in Japan is up about 1/4%. And a see a red across the pond in Europe. Same for the cash trade in Australia, down about 0.5%. Commodity front, well, all this funny money's got to go somewhere, and now it's starting to really juice the commodity market. WTI is trading at $45 a barrel. Brent is at $47.83. Huge moves here. Natural gas is at $2.94. And one would think that the precious metals market, especially gold and silver, would be doing much better than what they have been over the past few weeks. But I guess with all of the BS vaccine headlines over the past 3 weeks, remember, Vaccine Monday, I was joking, but it turned out to be true. Every week for the past 3 weeks, we've gotten some BS vaccine headline. But gold and silver are just really not doing too well. Silver's somewhat holding its own, but gold has gotten chopped down. We'll see what happens here over the next couple of weeks. I think it'll be crucial. Gold is trading at $1,808 an ounce. Silver is at $23.18 an ounce. I'm a long-term precious metal bull. And seeing the dollar index where it is and seeing gold and silver where they are, this is a misconnect. This is a disconnect. But we already know that these markets are rigged. So I'm invested for the long term. This is not a day trade for me. This is the long term. So you're going to have to be able to stomach the volatility. You're going to have to ride out the market manipulation and all this crap. But I do think there's going to be a lot of sunshine and rainbows on the other side of the hill as we make our way through the insanity of what we're already going through and the insanity of what we're going to go through because, we got Jay Powell at the Federal Reserve, and now we're going to have the former chairman of the Federal Reserve, Janet Yellen, as the Treasury Secretary. What could possibly go wrong? Well, we're going to find out, and it's not going to be pretty at all. Uncle Sam's 10-year junk note yielding 0.86%. All right, so that's some of the market performance. Let's get some of the initial jobless claims numbers out of the way here, and then we'll round this out with the U.S. debt clock. So for the week ending this would be for the week ending November 21st, 778,000 778,000 Americans filed initial jobless claims. For the week ending November 14th, so the prior week, this number was revised up by 6,000. It is now at 748,000. So we are trending upward over the past 2 consecutive weeks. This is in the wrong direction, obviously. But this is no surprise when you have these lockdowns. But more than that, I mean, that's, again, the excuse. These are some of the headlines. Now, it's definitely playing a part. But this economy, we are not catching our sea legs. The trillions of dollars thrown into the system has propped everything up. But we are not ready to take the training wheels off of this economy, not even close. This is all artificial. It's all smoke and mirrors. You can't do this and expect no negative consequences. Now, if that's the case, that there are none, well, then we're done paying taxes. And we're done paying our personal bills. Because central bankers just got to print the dough. And that's it. Send your bills to the Fed. Send them to the Treasury. Crazy Nancy. Chuck Schumer. Mitch McConnell. Send them to whoever you want. It's not your responsibility anymore. That's what this means. If that's the logic, well, then that's the next step. No negative consequences. I've printed trillions of dollars. Okay, good. Well, then I don't need to pay taxes. I don't need to pay my bills. Think about it. So 778,000 for the week ending November 21st. Continuing jobless claims for the week ending November 14th. Recall this lags a week. 6,071,000. This is a decrease from the prior week of 299,000. Persons claiming UI, unemployment insurance benefits in all programs. For the week ending November 7th, recall that this lags by 2 weeks. So taking into consideration regular state, federal employees, newly discharged veterans, pandemic unemployment assistance, pandemic emergency UC, both children of the Nobody Cares Act, extended benefits, state additional benefits, and work share, we get a grand total of 20.4 million. This is an increase from the prior week, which would have been for the week ending October 31st, of 135,000. So also in the wrong direction. The biggest decrease was again witnessed in the regular state programs, a decrease from the week over week of 414,000, but a sizable increase in the Pandemic Unemployment Assistance Program, better known as PUA, increasing week over week by 466,000. Also a sizable increase with respect to the PEUC program, up 132,000 week over week. So understand this is still highly distortionary. We still do not have a clear, vivid picture of the overall jobs market. But what we do know is 20.4 million Americans are still claiming some form of benefits. And when you take this against their number, the Department of Labor, as 146.5 million people. Okay, so that is covered employment. All right, that's one of their footnotes. Most recent week used covered employment of 146.5 million as the denominator. All right, so your simple math, if you took 20.4 million, dividing it by that 146.5, you're coming up to 13.9, 14%. Okay, now the Department of Labor through the Bureau of Labor Statistics would tell us in the official job number with the jobs report, the unemployment figure is at 6.9%. Well, something's not right here, right? It's not jiving. And this has been the case for a long time, as I said it would be. The jobs report's a joke to begin with. But now in these circumstances, it's just off the rails. And we're told month after month in the fine print at the end of the jobs report, oh, well, if we actually calculated it a little bit more accurately, the unemployment rate would be even higher than what we're telling you it is. I mean, this is beyond a joke. But this is what they're doing. And again, they do it right in front of us. It's in the press conferences, it's in the memos, it's in the letters, it's in the testimony, it's in the interviews, it's in the reports. You just have to pay attention to what you're actually reading, what they're actually telling us. So a lot of distortions here. A lot of people, are off of regular state benefits. I hope it's because they're finding jobs, but I really don't think that's the case, unfortunately. I think it's because they're expiring. They can no longer claim them. So they have a couple more options. They can perhaps file for extended benefits. They can perhaps file for PUA or PEUC benefits. But those are only going to last you a handful more weeks. I think PUA goes out to another 13 weeks. Same thing with PEUC. So if you've exhausted your state unemployment benefits, you only have a few options available to you. And now it becomes a question of timing, because you may have been unemployed before all of this took place in 2020. So you may have been going through your benefits to begin with. We also know that there's a lot of Americans, unfortunately, that haven't received said benefits yet because the states are broke. We are a first world banana republic. We're broke. And you're going to find out how big of a joke it is when we go to the U.S. debt clock. It's already a joke now when you look at it. It's where we are today, where we're going to be in 4 years, just maintaining current rates. You see how ridiculous this is. But what's going to happen when these programs expire? Most of them at the end of the year. Are we going to see a huge drop-off in persons claiming UI benefits because they can't claim them anymore because the programs no longer exist? They've expired. And is that going to mean, well, everything must be great again because nobody's claiming anything? These are the questions. These were the questions we were asking here since day one. These were the issues I have been addressing and talking about since day one. These are the distortionary effects. And if they continue with them, well, then it's just going to continue to be distortionary. If they pass the HEROES Act, because, if you vote against it, you're an anti-hero. You're not an anti-hero, are you? Or whatever else they try to pass, it's just going to kick the can down the road. It's just going to be more of this nonsense. And just for some more historical perspective, I like for the audience to understand this. We're looking at these numbers, 700,000, unfortunately getting close to 800,000 again. And the way we've been trending on the weekly revisions, they've always been higher. So what we're likely to see next week, and I hope this isn't the case, but this would be the trend, is that this 778,000 is going to end up being 780, 782,000 next week when they revise the figure. So before all of this started, these lockdowns, shutdowns, these massive waves of initial claims, we were at 200,000, 220,000 per week. Okay, this is the lowest. Basically, it's been since the 1960s, early 1970s. Okay, well, this is what happens when you can cut taxes, but you keep the spending going and you run trillion-dollar deficits. This is what happens. Okay, like I said, you max out 20 credit cards, you're gonna have a good time. Your neighbors, your friends, your family, they're gonna think, "Whoa, you're living a high life. You must be doing really well for yourself." And then you realize, no, that's not the case. That's what we're doing. We're charging all of our credit cards. And we're trying to have a party. The bill's going to come due and we're not going to be able to pay it. So again, 200,000, 220,000 per week prior to the pandemic, lockdowns, restrictions, yada, yada, yada. To go back to the great financial crisis, at its peak, basically in March of 2009, we were at 650,000. And we hovered around the 500, 600,000 range per week for several months. We're still well above that today, several months into this, and how devastating and destructive the great financial crisis was. So that just really puts this into perspective. And again, go onto the Federal Reserve's economic data website and type in initial claims and look at the chart. And then you're really through the roof back early on in March and April when we had 6 million people claiming initial claims. Okay? So these times are crazy. We're in the twilight zone, and all of the idiots who got us into this mess are being put back into positions of power across the spectrum. Further evidence that these people don't care about you. They don't care about you. They don't care about you. They don't deserve your vote. They don't deserve your respect, so don't give it to them. It's just a game. When you turn on the news and you watch these people talk, it's like watching professional wrestling. It's like watching WWE. That's all it is. It's smoke and mirrors. It's just a game. They're all buddies in the back. Out front, I mean, a big difference here is, at least when it comes to the wrestlers, you're looking at fit, athletic people. fit, athletic men and women putting on a show. In Congress, they ain't fit. They ain't athletic. They're pretty nasty looking, if you ask me. And they don't know their ass from their elbow. So they ain't good looking and they ain't smart. I mean, you can't write this stuff. I mean, this is who these people are. And we get to pay for all of it. But they know how to screw people over, don't they? They know how to steal money. They know how to rub elbows. They know how to look out for their own at our expense. Again, the other night we did the podcast yelling. No checks, no balances. No representation and no recourse either. So that's some of the jobless claims figures. It's unfortunate, but and it's no surprise to this audience. And as we talked the other night too, 5.8, almost 6 million Americans slightly concerned or very concerned that they are going to face eviction or foreclosure over the next couple of months. Millions remain in food bank lines. But don't worry, this is a super duper V-shaped recovery. Don't buy it, okay? Use your head. usdebtclock.org, all right? We're going forward in time. Again, a functionality they have here on their website. Going forward on this day in the year 2024 at current rates. U.S. national debt, $48.5 trillion. $48.5 trillion in 4 years. In 4 years. We're going to put on another $20 trillion in 4 years. Debt per citizen comes out to about $141,000. Debt per taxpayer comes out to $359,000. U.S. federal spending, $10 trillion. I mean, why not? Let's have a good time. U.S. federal budget deficit, the quote-unquote official figure, is going to come in at $5.6 trillion. But when you take into the funny business that the government partakes in, and you look at the federal budget deficit, the actual, which is what matters, that's the actual year-over-year increase to the national debt, that comes in at $6.4 trillion. So an additional $800 and some billion dollars per year. But who's counting? I mean, that becomes a rounding error at this time because it's $48.5 trillion. Well, all right, well, let's look at this as a ratio. Well, maybe GDP is at $48 trillion. So it may not be that bad of a deal. Not the case. Not the case. Gross domestic product will be standing at $28.8 trillion. We're currently at about $21 trillion. So not too much growth, which makes perfect sense because when you have all this debt, you cannot grow. So total debt to GDP ratio is going to come in at 181%. I know I'm throwing a lot of numbers at you. That's why I'm suggesting, advising you go to usdebtclock.org and look at this. But the point of the matter is this is out of control. Total debt to GDP, again, 181%. This is the likes of Italy and Greece, and Spain and Portugal, almost getting to the likes of Japan. We are off our rockers. This is ridiculous, and nobody brings it up. This is why the dollar is going down, perhaps, because there's no end in sight. But all the other countries are doing it too, so it just becomes a question of, all right, race to the bottom, who's the first to get there, in the currency wars, who's the best-looking girl at the dance, because all of these currencies trade relative to one another. That's all it is. That's why I'm a long-term bull when it comes to gold and silver. You really think Joe Biden and Kamala Harris are going to do anything to this? I mean, what they're going to do is make it worse. They're just going to make it worse. Trump wasn't making it any better either. Democrats aren't going to fix this. Republicans aren't going to fix this. I mean, the Republicans might start talking tough about the debts and deficits now because it's a Democrat in the White House. But they didn't give a damn when it was trillion-dollar deficits before COVID-19. They don't care that it's $1 trillion now. Wake up. Don't support these people. And a lot of them, more so on the Republican side, who got elected during the Obama-Biden administration, sort of that rush from the Tea Party. Where are these people? Where are they? Screaming at the top of their lungs at this nonsense. They're nowhere to be found. Because it's a joke. It's a game. It's wrestling. It's just a display. It's just for the people who say, well, that's what I agree with, so I'm going to vote for that guy. And then they're going to continue to do this. So you're going to scratch your head here in 4 more years, like I said you're going to, and the problems are going to be that much worse. You understand this? We're at 27 trillion right now. In 4 years, we're going to be at 48. Or I'm sorry, 48. We're adding another $20 trillion. And what are we going to get for it? That's the real question at the end of the day, isn't it? As citizens, as taxpayers, what are we getting for this? And the answer is going to be not much. Not much, unless you're rubbing elbows with these crooks and criminals. Not much. We're going to be spending $10 trillion, but you're not going to get much of it. They can talk about free. That ain't free. That's a big number. And we're already paying for it. Current population, younger generations yet to be, are paying for this. Because that's where it comes from. That's what debt is. Can't afford it today, got to borrow it from the future. Un-American, unethical, immoral. Should be damn right illegal at this rate. But nobody cares. Because as long as the digits keep going up with the debt, but it also corresponds with those digits going up in your personal retirement account, you don't care. And by the time you do care, it's going to be too late. So start waking people up. Start turning them on to the Kapital News and other like-minded podcasts and shows. Because this is it. This is our final stand. They are coming for us. They are coming for our money. They are coming for our retirement because that's the last place it is. We can't sustain ourselves with Medicare and Medicaid, Social Security, defense spending, the interest on our debt alone. And now these lunatics want to try to give away free education and health care to everybody. It's not going to work. So you better start waking up. And you better abandon the Republican and Democratic parties because these two jokers, these parties are responsible for this. And so are we for allowing it to happen. But you can finally take a stand and you can leave them. And I would ask and suggest that you change your registration to Libertarian. Do independent. Unaffiliated. I really don't care as long as you leave them and start sending the message. Because it's bad now. It's going to get out of control in the not too distant future. So again, happy Thanksgiving to everybody. I'll probably be off tomorrow, but back hopefully on either Sunday evening or Monday, because it will be Vaccine Monday. Stay diversified, stay vigilant, and stay with the Kapital News. I am Alex Correitis. Godspeed.